Welcome to the Real P&L Trading Show, where every week I show my real accounts, each tied to a specific trading system, so you can see exactly how each strategy performs in real time. And I share my proprietary safe wheel strategy for free here. And let me get into the comments there. Just want to make sure my audio is working, everything. Maybe you guys can let me know. Just give me a little bit of feedback there. Also, be sure to post any questions you might have. I want to make sure that the questions, any questions you have, that I don't end the broadcast before uh, before I get all the questions in. Sometimes people ask questions kind of at the last second when I'm ending the broadcast and I can't get to the questions. So I want to make sure you get those in. All right. So where are we here? So I'm showing my earnings edge account right here. And what was the last thing I did? So first I'm going to start with the earnings edge, right? And I traded MU and got out of that one for $1,113 profit. Since I've been trading my 3.0 system, my record is 13 wins, 1 loss, a 92% win rate. Average win $916. Average loss $516. And let's see. So my P&L, let's put that in. So last week it was 15,736, and last week the SPY was trading at 599.78. Let's see where we are now. Okay. So 16,794. So you can see my net liquidation right here, 16,794. And of course, I don't add or take out money, and I don't trade anything other than the earnings edge in this account. Oops, that's not the one I want to bring over here. They have this new thing going on here, the way that they see how tiny that is. It's hard for me to drag it over. They kind of changed this system to where I can't make this bigger, so I have to kind of go search for it. Okay, so I forgot what the number was. It was 16,794. See if I can drag this thing. I can't even. Okay, 16,794. Let's see what SPY is trading. I'm looking at it now. 603.70. 603.7. All right. So how's the earnings edge doing in 2025 with the new 3.0 update? It's up 177%. The market this year is up 3.11% based on SPY. So you can see that I started trading the earnings edge in 2022. And the market since 2022, the beginning of 2022, is up 27.11%. And the earnings edge is up 235.88%. So earnings edge is vastly outperforming, especially with this new 3.0 system. Okay, so that's the earnings edge. If you're interested in that, there is a link in the description. All right, let's talk about the PL5 Pro. PL5 Pro system. Let's go to, I believe it's this one. Yeah, 406,535. So let's put that in the spreadsheet. 406,535. 406,535. So down a little bit from last week. And this one's not linked properly. What is that? F27. Let me fix this real quick. Equals F27. Okay. So you can see that the PL5 Pro this year to date. So last year, I traded it for 6 months. I started it on July 19th, 2024. I was up 15.99%. This year down 13.23. So the PL5 Pro is actually up about 1%, but it is underperforming the market. The market's up 9.97% since July 19th, 2024. But I expect it to recover and come back and start outperforming the S&P over time. Let's see. So that is the PL5 Pro. Let's talk about the the PL5, just the regular PL5, which is tied more tied to the S&P 500. You can see that my or my net liquidation last week was 31,868, and right now I can't see the full screen to go through my account number. This is I use my interactive brokers. You can see my net lick is 31,951. See it there, 31,951. So it's up a little bit. 951. So it's up a little bit from last week. And you can see it's down about 3% this year. The market's up 3%, so it's underperforming a little bit there. But from July 16th, 2024 towards the end of 2024, the PL5 was up 10.2%, where the market was up around 3.9. So you can see the totals. The PL5 is up 6.5, the market's up 7.1, pretty even. So it's running pretty equal to the S&P 500, but I expect it to outperform over time, like it did in 2024, in the last half of 2024. So that's how the PL5 is doing. That's how the PL5 Pro is doing. And let's talk about the safe wheel. So with the safe wheel, let's get into that particular account. That would be the third one here, 5642. So 5642. That's down a little bit, about $50 from last week. And you can see it's up about 2.96% this year. The S&P is up 3.11, so just barely underperforming this year. But it does have about half the drawdowns. So on a risk-adjusted basis, it's outperforming. And you can see the totals about 12.8% and versus 27% for the S&P since the beginning of 2022. But on a risk-adjusted basis, they're pretty even. But sometimes when you get lower risk, you're going to get lower return. But I've seen higher returns with lower risk with this system also. So like an example of 2022, when it did 21% and the market was down 20%. So it's a very good system there, especially if the market is not doing as well. All right, so that's the safe wheel. I'm going to trade the safe wheel now because I've made virtually every trade live with this safe wheel. So I'm going to go into this safe wheel account, make sure I'm in there. Okay, and let's take a look at the positions. I'm trading LI, and I'm trading the wheel, but I'm also trading the safe wheel. So I have a hedge and a couple hedges going on here. Oh, I've got a hedge that I've got to move, it looks like. Okay, so let's talk about the hedges first. I'm going to talk about my long call because that's been taken care of. I buy a long call for about $5 on every Friday. And so that covers this put, because this put could lose all of its value if LI were to shoot up. Maybe there's a takeover bid or something, and LI goes from like 28 to 58. This put's going to lose all of its value. So therefore, I buy this little $5 call just in case. So I spend $5 a week on that hedge. Now, this particular hedge here, I haven't even looked into this, but I do need to move it, I can tell you. So I have 3 questions with the hedge. Number 1, do I own 200 shares? And if the answer is yes, has it paid off? Well, I don't own 200 shares. The answer is no, so I don't worry about that. Next question is, am I with under 100 days? Because if I am, it's depreciating too fast. And the answer is yes. So I'm going to need to move this put. And so what I'm going to do is take about 80% of this 2863, because that's where I'm going to pick my strike. So 2863, let's go with about 80% of that. 28.63 times 0.8. So I'm going to go to about a $23 strike if that's available there. And so I'm going to move this. I'm going to roll it. I'm going to sell this and buy a $23 strike. But I'm going to get a close to maybe about 150 DTE. Let's go see what I have, what's available. So I've got the 186. I'm going to go into the 186, and I'm going to buy the $23 strike. So I'm going to buy this right here, this put. I'm going to buy 3 of them. So I'm actually going to roll it. So I'm going to do both at the same time, meaning a roll means I'm going to just trade both of them at the same time. So I'm going to say create rolling order. And I'm going to sell this one. And then I'm going to buy, which one am I going to buy again? I'm going to buy, let's take this out of here. The 186 of December, 19th December. Yeah, okay, good. That's where I'm going to go. So it's got the correct expiration cycle. Now I want to buy the 23, not the 22. So I'm going to move that up a little bit. So I'm going to pay a debit of about 94, approximately 95. Okay. So I'm going to, well, I'll probably pay a little bit more. There's going to be a little bit of slippage in there, I'm sure. But yeah, so I'm going to sell what I currently have, and then I'm going to buy. I'm going to go move a little closer to the money, and I'm going to go out further. So I'm going to go up and out. That's why they call it up, right? Because I'm going from 22 to 23, and then out, of course, because I'm going from September and out further to December. So I'm going to go up and out. And see, now the mid's 97. Let's see if I can get the mid. Okay, yeah, it's good. It filled. So let's see what I got for it. 97. Okay, so now my put hedge. Now let's look at the put hedge. The questions are, do I own 200 shares? No. Question is this over 100 days? Yes. So I don't need to do anything. And then the other question is this close enough to the actual price? And the answer is yes. We know it's within about 80%. Okay, so our put hedges are good. So now I'm going to run the traditional. Now my hedges are good, not put hedges, but all my hedges are good. So I'm going to run the traditional wheel. I got assigned at $30. So last week I sold a $30 put and I got assigned. And so now I own 100 shares at the 30 strike. So I'm going to try to sell a call at the $30 strike or higher. Let's see if I can do that. And I want to get at least 28, 29 cents for it. So let's see, and I want to do it in the nearest expiration cycle. So let's see if I can get that. No, see, I can't get enough premium at the $30 strike level on the call. So I'm not going to sell it. I'm going to do kind of like a martingale situation where I'm going to double down. I'm going to double my position, and I'm going to sell another out of the money put. And I want to get at least 28 cents. So I can't get that at the $28 level. I can get it at the $28.50. So I'm going to sell the $28.50. I don't want to go to 29 because that's not out of the money. So I'm going to go ahead and sell one of these. Now the way that I do this is for between $5,000 and $10,000, I'll do one wheel, and then I'll do 3 put hedges. So I'm going to sell one of these. Collect about maybe 45, 47 cents, $47 here, and it'll expire at the end of the week, and maybe I'll get assigned. Okay, so that filled. So I collected another $47. All right, so I moved my put hedge, I moved my hedge, and I collected another $47. So I'm always collecting. And so there's my safe wheel strategy for today. What's today? The 16th of June. Okay, so that is the trade. Those are the trades. You can see those, I hope, clearly on there. Also, if you're interested in the safe wheel, I actually have a class, a master class on this whole thing and everything that I'm doing here. And I actually have a flow chart where it tells you exactly what to do in every scenario. And for a limited time, I'm giving that away for free. All you need to do is hit that link in the description, and you can sign up and get the course for free right now, the whole course. Okay, so if you're interested in what I'm doing, take a look at that. All right, let's see what there's questions or comments. Avery says, hit the like button. Yes, I appreciate it if you hit the like button. You notice that I share my P&L. I also share it with each individual account. And I only trade one system in each account. So you can see exactly how that system is doing. So it's not just a hodgepodge of all kinds of different things going on and it's confusing and all that. No, it's here's the exact system with exact rules, and here's the account and exactly how it's doing. So I have my accounts separated like that. Avery says she's first. I'm not. Yeah, she is first today. Kevin says good morning from Florida. Less is more says the shovel isn't here, but he said he was first. Yeah, I'm sure he'll say he was first, even if he wasn't here. Less is more says I hear the markets are closed Thursday. Anyone know if that's true? I'm not sure. We could probably look that up pretty quick and easy. I can just ask ChatGPT. Maybe that'll tell you. I'm not sure. Well, why would they be closed on Thursday? I don't keep up on a lot of things like that. Okay. So Monarch says Thursday is a U.S. federal holiday. So yes. Oh, is that Juneteenth? Maybe because that's kind of a newer holiday. Some guy. Am I now getting real strategy advertisements during my YouTube videos? It's possible. It's possible. Thursday will be a boring day. True, but on Wednesday, we'll get 2 days worth of depreciation. You can look at it like that. Marcus Avery says Marcus closed, nothing to stare at. And Rob says, good morning. I'm new to the Earnings Edge and want to know if you can display the risk graph on TOS that was risk graph proper structure. Definitely, I can get into that if you ask inside the community in there, because that's more of a proprietary question, and we'll definitely answer that question for you. Avery said, when trading the traditional wheel, what do you think about those who attempt to save their covered call position through constantly rolling? Could this be a viable play or just delaying the inevitable? Rolling which way? So the thing is, when you like, for example, right now, I'm assigned at $30. All right, so no matter what, I own 100 shares at $30. So what am I going to roll at that point? I'm there at $30. So if the stock's below $30, that particular position is going to be down no matter what happens, and it can be down enough to where you can't even sell premium. You can sell. Okay, so you're saying I'll just sell premium at the $28 strike, right? And then instead of getting assigned, I'll just keep rolling my calls. But what happens is if you roll, let's say I have a $28 strike, I can get assigned. I can get called away unless I roll that out, right? But where am I going to roll it? I'm going to roll it down. I'm going to end up paying a debit, right? So you're going to end up paying for that debit no matter what, even if you're trying to roll things around. Basically, is kind of the answer to that question. Rob, great, thank you. Yeah, Rob, look forward to seeing you there and answering your questions. Sure. And Rob says, those folks are foolish. If you enter a covered call position, the trade was designed for you to have the stock taken. Take the profits and move on, he says. Okay, yeah. It's just difficult to be rolling positions around when you're going to be paying debits. Avery says, take the money and run. Let it get called away. Yeah, eventually the stock's going to come down and you're going to get assigned. I mean, there's no way around that. And also, if you run the traditional wheel, you might give yourself 5 positions, right? You might say, okay, I'm gonna try to diversify into 5 different positions. Well, like I've said before, it's just a matter of time. It could be a year and a half, 2 years, where all 5 of those positions are going to be down and you can't sell any premium, and you're going to be down 30, 40, 50% on your portfolio, hoping that those 5 stocks that you chose eventually go back up. And they might go back up, but it's just a question of, well, during that time frame, you're waiting for all this to happen over a 1 year, 2 year period. You're underperforming, right? So you're playing catch up. So you went through, you've traded for 2 years and you don't have anything to show for it. So that's what's kind of wrong with the traditional wheel strategy. Rob says he sent you an email. Okay, sure. Yeah, we'll get that email, Rob, and we'll definitely talk to you about that particular filter. You're talking about a very specific filter on the system for the earnings edge system. And email regards to a scan over the weekend. Okay, interesting. I'll look into that for sure. Yes. Okay, Rob. Um, Dave, newbie here from Florida. Aside from no earnings reports, why do you not trade ETFs? Oh, for the safe wheel, I'm assuming. Sometimes you can kind of get, I wouldn't say totally stuck in the safe wheel, but you can get kind of semi stuck where let's say right here, I get assigned at $30 and my put hedge is at 23 and the stock is hanging out around 25 and I'm kind of a little bit in no man's land. It, you know, so my put hedge isn't really paying off and I can't really sell premium because I got assigned twice. Maybe I own 200 shares. Well, if a earnings announcement's coming up, that'll give me what I need, right? Number one, it'll give me more premium when I sell. If I try to sell a covered call, or if I sell another put, it'll give me more premium. But also, it'll make the stock move. I needed to move. I needed to get deeper into my put hedge to pay me off, or I needed to go back up because I own 200 shares. I need a movement. So that's the main reason. The other reason why I don't trade ETFs is, well, they don't necessarily have enough premium because I always like to be out of the money and be able to collect at least 1% of the price of the underlying. And also, a lot of ETFs don't do that. And if some of them do, but that was what would be the other reason. But the main reason is sometimes you get in a position where you need the stock to move, or you need to collect some premium and you haven't been able to collect it, or it's just too far away from the money. But if we were coming into earnings right now, even trading at 28.60, I would be able to sell some covered calls at the 30 strike or above. I'd have enough premium there would be enough premium for me to sell a covered call right now. So every once in a while, I need that catalyst to help move the trade along. That's a good question. All right. Any other questions or comments? I don't see anything. I'm going to work my way out, and I'm going to say in parting, if the P&L is not real, what else are they trying to conceal? All right, guys, I appreciate you, and I will be back next week. See you then.